Wall Street Capital CEO Douglas Anderson is joining us now from Bucharest, Romania, to discuss the U.S. election. Now, Election Day voting has begun in the United States, with Donald Trump and Kamala Harris vying to become the next president. What will decide the U.S. election and why it's so close? Good to have you, Douglas.
Great to be here.
Thank you. Now, how might each candidate's policies affect economic growth and job creation?
So, Trump has laid out a very, very clear path of what he intends to do, and it's viewed largely as a growth-friendly strategy. It starts with drill, baby, drill. It starts with cutting spending. It starts with cutting taxes, and it starts with ending wars. And I think most people on Wall Street and economists believe that that will certainly spur the economy. It's been a tried and true formula in the past. It worked with Kennedy, it worked with Reagan, it worked with Bush to some degree, so it even worked with Clinton in part of his administration. And it certainly worked with Trump and his administration. I think that that lays out the Trump economy strategy in simple terms. With Harris, she hasn't been interested in really articulating details of her plan. And those that she has been pounding on, particularly in the last 48 hours or so, unfortunately haven't been truthful, and they're demonstrably not truthful, because she's saying, for example, what are the voters really keyed on? I mean, this morning they're going to get up, they're going to drive their car. That's they're going to have some eggs, which cost 20-30% more than they did a year or so ago. Then they're going to get in their car, which is filled with gas, which is costing 20-30% more than it used to. They're going to leave their house, whose interest rate has gone up and mortgage payments have gone up. And so those things that they can look and feel every day are going to be on their mind when they go to that poll. And the answer that Harris has given on this particular issue, for example, just within the last 48 hours, she has articulated it, and it's wrong. What she said was that she is going to stop the big corporations from price gouging food costs. But many of these corporations, if not all of them, are publicly traded, and so guys with guys with an internet can go on and look at their financials and see, okay, have they gouged prices? Have they increased their prices? What kind of margins are these companies experiencing? Now, if you went and looked at their margins 2-3 years ago, and then compared it to today, you're not going to see an increase in their margins. What you're going to see is flat, if not declining margins. So that means the prices that are causing this increase are coming from somewhere else. And where that difference is coming from is government spending and government printing money. And so it's very clear. And so that solution isn't one. And in fact, it's probably likely to lead to very bad situations with the economy in terms of potential higher prices and less products on shelves and things like that.
Now, what changes to trade policy might we expect, and how could these affect the U.S. economy and global markets?
So Trump has been very clear that he's going to challenge some of the countries around the world that are bringing goods to the United States with tariffs. And this, he's also, and it's going to be a reciprocal situation. And so what he's trying to do is bring a little bit more fair playing field to the globe, and in particular for American manufacturers. So, for example, if China is putting 100% tariff on cars that are being exported from the United States to China, then Trump's going to counter that and say, okay, well, we're going to put 100% tariff on cars that you send to the U.S. And when that happens, China will lose its significant advantage, which is low wages in China, if there's a counter tariff to that. That's also interesting for emerging markets like Turkey, that could find itself moving into a place where now it is competitive to export from Turkey in competition with China or other Asian countries.
Now, what role do issues like climate change and renewable energy play in each candidate's economic plan?
So the Green New Deal that Kamala Harris fully backed and voted for did a lot to spur a lot of government growth and spending. And that did a lot to increase inflation. And so if you look at Trump's policy in that regard, he is opening national parks and not parks, but government-owned properties that have oil reserves, and he will open those and license those to be exploited. And when that happens, it is very, very significant. The oil reserves are greater than the Middle East, greater than Russia, greater than China, certainly, greater than South America. They're the largest in the world. And plus, we have the technology and companies to exploit that. So you bring down the cost of energy, you really bring down the cost of everything. And he's doing a lot of other things in terms of tax incentives and deregulation to spur the economy. For example, he's writing off, allowing interest payments on cars to be deductible. Something like that would, significantly incentivize somebody to go out and buy a car. And it's certainly the car industry thinks so, and they're extremely excited about it. As a Wall Street guy, we like to see money in the hands of people instead of government, because we think people can spend the money better and wiser than the government does. Going back to the Green New Deal, I can't remember how many billions were spent to put charging stations all across the country, and really none of them were installed. Billions were spent, but no charging stations came. And so it's this kind of inefficiency and, in some cases, probably corruption is not healthy for the economy. And when people get more money in their paycheck and they decide to go out and buy a car for their son, or buy, even a horse or something for their daughter, whatever, that money circulates and it moves the economy. People buy things, and that's commerce. Government waste isn't such it doesn't have such an effect.
Now, lastly, what impact might the election have on financial markets, and how are investors preparing for different potential outcomes?
So I think that if Trump comes in, you're going to see a very significant boom in the economy, and I think we'll see unprecedented growth, particularly with the team that he is bringing in. This time around, he is very well educated from the first term that he had, and he has got an A-team transition group lined up, headed by the former head of Cantor Fitzgerald, the famous firm out of New York, the hedge fund firm out of New York. And he is a very, very skilled person, particularly in how to develop a skilled team. Then you've got giants like Elon Musk coming in, Bobby Kennedy, and some of the things that they're talking about are game-changing benefits that will really spur the economy if they hit the ground. With Kamala Harris, she's essentially said that the difference between her and Joe Biden is she's a woman. So I think we can kind of expect kind of more of the same, and we know what those results are, unfortunately. So that's the contrast.
Douglas Anderson, thank you for joining aNews, and thank you for your analysis.